Part 3, here we go, 25 to 11. And you had some pretty mixed trades so far. That would have been a buy trade on the New Zealand dollar, US dollar, right at the bottom of this candle. And then you would have closed out after the first period. You wouldn't have got this second one because the accelerator oscillator above zero still. Cheeky 7 pips. Great British Pound Canadian dollar. Well, you either would have been in a buy trade here or here. So neither one of those looking particularly good for your prospects at the moment. And the Euro Australian dollar on the right. Do you know, you wouldn't have got in here because that was actually filtered out by the moving average. There we go. There we go. We do see a trade filtered out by the moving average. And then in fact, it also would have filtered you out on this one as well. The RSI reading 38.24 for that period. So you would have been looking for a buy trade there and you wouldn't have got it because of the moving average. So if you are trading the strategy correctly, you won't be on anything for the Euro Aussie dollar. You'd just be hoping that the Pound Canadian doesn't trend too much. The RSI on both those charts really low though, 20.93 on the Pound Canadian, 25.59 the Euro Aussie, getting deep into oversold territory. For now, the one for us to watch is the New Zealand dollar, US dollar. RSI up at 57, could get above 60, but again, surprisingly, the moving average could filter you out. Well, watch what happens there. Let's see our economic calendar. What have we had? A South Korean unemployment rate, 3.2% actual against 2.9% forecast. Bit of a miss for them there. They were hoping it was going to improve on the previous 3%, but it has taken a dip to 3.2. CPI month on month from China, 0.7% actual, was forecast at negative 0.3. So they thought deflationary. They had a flat previous, but they couldn't control it this month. So that is exceeding the forecast by 1% on the CPI. That was Asia. In Europe this morning, Germany, 9 a.m. CPI month on month as well. 0.5% actual, 0.5% forecast, 0.5% previous. That started picking up for Germany. They were able to hold it flat for a good while, but now it's coming a little bit for them as well. At the same time, we had CPI month on month from Norway, and they were deflationary, a negative 0.3% actual against 0.2% forecast. They had a 1% previous. So last month, the reading was 1%. That was the reading in October, so it would be for September's figures. I mean, they raised interest rates about that time, and immediately they're getting a deflationary environment. Don't usually expect to see it that quick, but that does mean they're year on year currently at 3.5%. Not really much for us in the morning. We do have industrial production month on month from Italy in the Eurozone. That's in 20 minutes time at 11 o'clock. And then more inflation data this afternoon. We got Brazil, 2 o'clock. Their forecast at 0.77%. They missed on their PPI. Wouldn't be surprised if they miss on the CPI as well. And then the biggest CPI of all, the United States dollar month on month. That's forecast at 0.5%, coming through at 3:30 along with the core CPI and the weekly initial jobless claims. Definitely expect volatility on the charts then. People will be watching that number closely. We had the PPI, the Producers Price Index, yesterday come in slightly under than forecast at 0.6 against 0.7. But this one people do pay a little bit more attention to. No one feels bad when the producers are paying more, but when it gets to the consumers, oh, you're going to hear it. And that's pretty much it. It is Wednesday, so you get the oil stocks change at 5:30, and then late into the evening, federal budget balance on the US dollar at 9 o'clock, and right at the very end, 11:45, the food price index month on month from New Zealand. So 3:30 will be our focus for the economic calendar. Back on the charts though, wow, you're certainly glad to get filtered out for this Euro Australian dollar trade. Look at the plunge it's taking. Doesn't look like we're going to get a signal this period, but I'm sure you'll get a few throughout the day. We've had 11 so far from the last 2 days, so you would expect another 5.5 trades today. All the way on to 12:30 now. Still no sign of a signal. Been going almost 2 hours now. Euro Australian dollar playing it right down the middle. Pound Canadian dollar, it's really leveled off in a range. The New Zealand dollar, US dollar also playing it down the middle as well. RSI at 49.59. So really not much movement at all. On the economic calendar, there was the industrial production from Italy month on month. 0.1% actual against 0.0% forecast and a negative 0.3 previous. Things are looking up, even if it's only at 0.1%. Coming into 1 o'clock now, and we are going to get our first signal of the day by the look of it. The New Zealand dollar, US dollar over here on the left, RSI at 38.19. Highest high of the last 14 periods for calculating our take profit. 21 pips is what we'll call it. So you can see our risk calculated on screen now as it turns over 1 o'clock and we enter into a buy trade. And our take profit goes in, but you can see it there at the top. We are in the trade, and we do see the accelerator oscillator cross over zero, which means we'll have to wait for the reverse crossover now, get above the zero line, close off, and hopefully make us some money. This has been ranging for some time. Don't want to assume this has just been a consolidation and we're going into the drop off now. That would not be good. But every trade's got a chance, so let's see how it goes. 15 minutes in, after just one period, it's already looking like a pretty grim situation for us. The downward trend has continued. RSI now down at 31, and our trade is about $65, $70 down. We can't handle too many more of those. And if we get another $200 losing trade or more, then we are done for. We're already done for, but that would be a nail in the coffin. 2:15, and our trade has just been ranging around $53 down at the moment. Last hour, not a lot of movement at all. We do need it to come to the upside, or else that accelerator oscillator will eventually drift across zero, and it will be a loss for around about this amount. No other signals on the other charts. We have come close on the Euro Australian dollar. You can see the RSI there finished at 40.56. That would have been a buy trade at the end of that candle. Be slightly to your favour at the moment. But keep an eye on what's going to happen with this New Zealand dollar US dollar trade. Here we go for another trade entry. The Euro Australian dollar going to give us a buy trade. The RSI in the 37s. Let's measure out that risk. There's our highest high, looking at about 29 pips. And so now we can get into a buy trade. You can see the risk, 0.63 lots. There we go. We are in our trade. And we also see on the New Zealand dollar, US dollar, the accelerator oscillator crosses zero. If it closes like that, we'll be exiting the trade. Could really do with a green candle, just bump us up. Don't make it too much of a loss. And when we look at the accelerator oscillator on the Euro Australian dollar, it is beneath the zero line, but it's not very far across it. Couple small green candles, we could definitely see that push across. Like to take some small profits there. And here does come the trade close for the New Zealand dollar US dollar pair on the left as we roll over 3 o'clock. Let's shut it down. The accelerator oscillator crosses above zero. It was a loss, but it certainly didn't get away from us. If you think this was the range, price was drifting back up. Made sense for the accelerator oscillator to cross zero. We were just hoping that we'd either get more of a bump, or that when we started we hadn't got that big red candle. That was the difference maker right there. So we do finish that one with a loss of $30.08, but it could have been worse. And we've still got our Euro Australian dollar trade open, which is about $15 profitable. So maybe we can get some back from that. The accelerator oscillator, that's above zero. Only just about, but there is a chance that we'll be closing it off this period. Just a moment ago on this Euro Australian dollar chart, we were at $35 in profit up at that high there, but as the candle closes, when it rains it pours, it does look like it's going to be a loss. No, I think we just snagged out 46 cents there, and we did. It is a winning trade. That is fantastic. But wow, we were close to being in profit for the day. We've only had the $30 losing trade. 314, it was up there at that high, and then the last minute, sell off, and we end up barely scraping through. Thought that was going to be a good one when I looked at it a minute to go, but unfortunately not getting back the losses we had from the New Zealand dollar US dollar pair. We'll wait for another entry signal. All three of these looking like they could give buy signals if they dip into the oversold territory. They're all hovering around 42, 43 on the RSI. Here's the inflation numbers, and you can see immediately the chart's going wild. Good thing we weren't still in that buy trade on the New Zealand dollar US dollar. It is dropping fast, and that is a miss, 0.9%. Ouch. They're expecting 0.5% on the forecast. They were also expecting 0.5 on the core CPI, which is coming at 0.6, but 0.9, that is a really poor figure. If you had that every single month, you'd be looking at 10.8%. Rough, very rough results. A lot worse than expected, and more than twice as much as the previous 0.4. Does seem like buy signals could come through at 3:45 on both these left-hand side charts. We are going to have two signals coming in for us. Let's measure out the risk on the New Zealand dollar US dollar chart. It's about 25 pips. We might see some movement on that in between. Wouldn't be surprised, but we do have to stick it out somewhere. So 25 pips will be the number. Same on the pound Canadian. We'll be getting a buy signal, and that one will go for 30 pips on. This is absolutely trying to catch a falling knife on both these charts. And we do see the signal coming through on the Euro Aussie dollar as well. Let's focus up on these two first. So we've got 0.54 lots. You can see all of these risks are going to be on screen, of course. So we're going to buy there. And then we're going to buy on the pound CAD as well, 0.56 this time. And then we've got the RSI 38.94 and the Euro Aussie dollar. That's going to be 29 pips for the risk. And so it'll be at 0.63 on the volume. A little slow on this one, almost a minute past since, but better late than never. Set the take profits for all of these. I don't think any of them are going to do well at all, to be honest. It'll either be the absolute savior of the strategy, or much more likely it will be the death of the strategy. It doesn't seem so probable. We've got to watch the accelerator oscillator as well on each of these, because it is above zero on them at the moment. So if we do see green on any of these trades, we will likely be closing out just one period. Meanwhile, just because of the inflation numbers, let's not forget that we did get initial jobless claims as well at 3:30. That came in at 267,000 against the forecast of 275,000. And also, let's not forget our CPI month-on-month from Brazil. That came in at 1.25% against the forecast of 0.77, even more than the US inflation of 0.9. Inflation is something that South American countries have typically struggled with, and Brazil is no exception right now. But it is all about these three trades, all of them losers at the moment, $70 down between them. But you never know, we're in it to win it. We want nothing but green here. Let's make it happen. 5 seconds to go until 4 o'clock, and it does look as though we are going to be closing off the two trades on the left-hand side there. Let's get those shut down. The accelerator oscillator closing above for both those. Let's pull that up on the trade history. There you go. But the accelerator oscillator was flipped on the Euro Australian dollar. And I think that's pretty bad. I think likely that these trends will continue. I mean, on those two trades, very close to a wash. It was $71.70 loss on the pound CAD and $63.18 on the New Zealand dollar US dollar. Once you factor in the spreads, they were pretty similar, to be fair. Although it does put us a bit more down at $38. This is what we want to see on the Euro Aussie though. We need the return, and we need it in a big way. Really would like to take some profit from today, but we'll wait and see it out. We are measuring out our risk on the New Zealand dollar US dollar chart. 41 pips will be the number, and we are going to get a sell trade here as it moves into overbought territory above the moving average. Let's sell off the market here, and that's our take profit down there. Let's hope we can catch the reversal. We did last time on this chart. It is up at a resistance level as well. Zoom out so you can see that better. Definitely a resistance zone. And as it's the last session, we are going to throw everything at it and get back in here with a pound Canadian dollar buy trade. The RSI 35, and so we're going for 36 pips to the stop loss, and we can get in here at 0.46 loss. The last time we were in a buy trade, it didn't go so well for us, but now here we are again with all the potential in the world. And we are about to close down one of our trades, the New Zealand dollar US dollar, and it's good profits. It is good profits, $90.09. So if we don't include these two active trades that are going, we are 51.95 up for the day. And the New Zealand dollar US dollar has turned into a bit of a shining example of what the reverse relatively simple strategy can do. Back-to-back wins. We got $63 out of that move, and then 90 on the return. And we did have a buy signal to get right back in there at 38.34. That was the RSI's reading. You can see that there. But we are not going to take it because we are just going to wait out these last two trades of the pound CAD and the Euro Aussie, and that'll be the end of our session. Now we're going to get to close another one, the Euro Australian dollar. It rolls over, the accelerator oscillator closes, and we are able to just about keep the loss under $200. 195.62 in the end. Really got caught on the bad end of that trade. If you're trading the relatively simple strategy, pretty prime, as it's meant to work. You get in right before the big move. As the momentum builds, it pushes you in, and then price ranges off until eventually the accelerator oscillator slips across that zero line and you shut it down. Bit of a loss for us, $143.67 down now for the day, with one trade left, the pound CAD, and it is $60 down, but it has had a very strong green candle just before. With the accelerator oscillator still below zero, hopefully we get two more periods like that push it right towards our take profit. And we could maybe get one more winning trade out of it. And we got pretty close here. We did have one decent sized green candle and another small one, but we are still going to close it off for a loss. Pretty minimal loss though, not too worried about something like that. $10.72. Could have gone a lot worse. And this is a prime example, honestly, of where the stop loss would have knocked you out. If you had a stop loss, I mean, where are you putting it if you let it run past there? And that's where too much luck comes into this strategy. With the Euro Australian dollar, it ranged rather than bouncing, so we took a big hit on that one. But with the pound Canadian, it bounced, and so we didn't take much of a hit. If we took out the spreads, we'd be basically in profit. But there we go, not a good day's trading. And I think between the relatively simple and the reverse of it, a lot of it comes down to whether you get a ranging day or a trendy day. When we wanted the trendy days on the relatively simple strategy, we got the rangy days. And then when we wanted the range-based days, we got more of the trending days. It's just the way it goes, but you can see how either way you play it, it can end up going against you depending on the overall market. The New Zealand dollar, US dollar, that's a prime example of what you can get in a ranging, bouncy market today. A couple of really good trades, and it actually has bounced a bit again, so you'd be in profit if you took that buy trade back there. Maybe now the spread would just take you into loss, but it'd be pretty close. But on these other two, we've had trending days, and they've done quite a bit of damage to us. So we finished the day at $154.39 down. The best of the 3 days, to be fair. So let's round it all off over in the journal. So when all is said and done, how does it look from the perspective of the journal? Not very good. I think we already know that. As we scroll down, if all you were doing was looking at the color, whether it's green or red, there is plenty of green out there. 18 trades we took across the 3 days, 9 gains, 9 losses, so right down the middle. But we know that the average loss was quite a bit more than the average gain, particularly almost $500 those losses came on the Euro Australian dollar from yesterday and today. Yesterday, that big one there, $278. That was a giant loss, and then today another one for $195. Yesterday was a sell for that loss, today was a buy for it. Really poor trades. And we didn't get a green day out of it. Red on all 3 days, just as we were with the relatively simple strategy. But actually, we didn't take as many losses on this one as we did with that one. Here's a quick side-by-side comparison, and you can see trading the strategy normally costs us $1,143. Doing the exact opposite strategy only costs us $732. So quite a bit of an improvement in that sense. Cut the losses by 30-40%. And on the original strategy, 17 trades, only 2 of them produce wins. At least in the reverse, you do get to say you won 9 trades, regardless of how mediocre the gains are. All that it means is that both strategies are completely unworkable. And it is a good example because I'm sure many of you have thought that you could switch a bad strategy on its head, take the opposite signals and make money. Well, there's a fair chance you'll just end up in the market that you don't want to end up in, trading the wrong asset. Not much more to say on this strategy. That's $732. That was about 10% of our account. Really close to that. We started at $7,325, now down to $6,592. 10% in 3 days. And that was with trying to keep our risk managed, playing on the 15-minute chart. Still ended pretty badly, as an understatement. And let's wrap up the strategy once and for all with our final thoughts. Final thoughts, we had pretty high hopes for this strategy, but that was only because of the absolute failure that we witnessed in the relatively simple strategy. When we traded that strategy, it bled losses for 3 days straight, and without any evidence that you'd get any really good signals from it. So because of how badly it went, we made an assumption that reversing those signals would therefore make the strategy profitable. And okay, maybe we didn't have high hopes, but we certainly didn't have hopes as low as the results of the strategy demonstrated, because amazingly, it also turned out to be a complete abject failure. It wasn't that there were small losses taking opposite signals to one another, they were heavy losses on both sides. We've talked about the possibility of a stop loss on this strategy, and whilst it would absolutely reduce some of those big trending losses, I really don't think there's a good enough stop loss position to ever get consistent profitability. There weren't many entries that went immediately in our direction. Plenty of them would have knocked out a tight stop loss, even though we ended up surprisingly taking small profits on a few of them. So the profits you saved from not being as much of a victim on the hard trends would likely just be given away again in trades that did end up reversing back to your favor. We also never saw our take profit trigger on this strategy over the last few days, but we did see those levels trigger multiple times as a stop loss when we traded the relatively simple strategy. I'm not really sure what to do with that information. So where can we go from here with the relatively simple strategy? Well, I fear that that is it for the strategy. Signals that come from the relative strength index at the levels of 60 and 40, from our testing at least, do not appear reliable regardless of whether you take a buy signal or a sell signal from those readings. You would need a very nifty money management system in place to make it all work. So that does mean that I personally could not in good conscience recommend the use of those levels for trading, but maybe you've got some major tweaks in your system that makes it work. Here's hoping. We might find ourselves back on the charts with the relative strength index again, but it certainly won't be in the capacity we've used it for in the relatively simple strategy or any variation of that strategy. So that is it. Don't trade this at home, but if you do want more information on either the indicators or the strategy, you can find some of that in the description. And as always, these strategies are traded with demo money only, throwing indicators at the wall, seeing what sticks. If you are enticed by the results of this strategy to get involved and trade it live with real money, good luck to you. You know what awaits. Just try not to lose too much. Thank you for watching. This is Project Trade. I am Darth Trader, and there will be more.